Good morning, viewers. Welcome to ST Money's Morning Talk, your weekday business news channel. It is Monday morning, August 26, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. US stocks rallied on Friday as dovish remarks from US Federal Reserve Chair Jerome Powell solidified expectations that the central bank will cut its key policy rate in September. In the highly anticipated comments before the Jackson Hole Economic Symposium, Powell said the time has come to lower the Fed funds target rate and the upside risks of inflation have diminished. Let us now watch a short clip of his speech, courtesy Bloomberg.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions.
The takeaway from Powell's speech appeared to all but guarantee a rate cut at next month's policy meeting, which would be the first such cut in over 4 years. Next week, the data-dependent Fed will have a raft of economic indicators to consider ahead of its September rate decision, including the Commerce Department's revised second quarter GDP and its broad-ranging personal consumption expenditures PCE report, which includes the Fed's preferred inflation yardstick, the PCE price index. All three indexes logged weekly advances, standing on the shoulder of last week's largest Friday-to-Friday percentage gains of the year. The Dow Jones Industrial Average rose 462 points or 1.14% to 41,175. The S&P 500 gained 64 points or 1.15% to 5,635. And the Nasdaq Composite added 258 points or 1.47% to 17,878. Mega caps Nvidia, Apple, and Tesla provided the most muscle. Small caps and regional banks were outperformers, rising 3.2% and 4.9% respectively. An expert did opine that if a major calamity or a recession were on the horizon, regional banks and financials wouldn't be as strong as they have been. All 11 major sectors in the S&P 500 ended the session in positive territory, with real estate shares boasting the largest percentage gain, rising 2%. Among individual stocks, Workday beat quarterly revenue expectations and announced a $1 billion stock buyback plan, sending shares of the human resources software firm up 12.5%, the biggest percentage gainer on the Nasdaq. Ross Stores gained 1.8% after the discount retailer raised its fiscal 2024 profit forecast. TurboTax's parent Intuit sagged 6.8% in response to disappointing quarterly revenue. The yield on the benchmark 10-year notes is 3.873%. Brent crude is trading at $79.54 per barrel, and gold is $2,514 per ounce. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember, it is all about money.